usually in Chicago, but visiting us here in New York. Thanks for joining us today.
Oh, thank you, Scarlet.
So tell us a little bit about this short Valeant Long Glencore trade. How long have you had this kind of position, and are you still in it?
Yeah, so I've been following Glencore actually for a long time. It always was a very interesting company to me with an eclectic asset base and a very strong management team. And what was interesting is, we had a commodity rout of the past several years.
Right.
And come October is when you started to see real stress in the sector overall. So when the stock actually started to get around 100 pence, we looked at it as an investment. We thought that the intrinsic value of the company was dramatically lower than the market was perceiving. The key to that, though, was I think it was actually on that Friday, I was almost tempted to take a position, and then it was the weekend. And then I said, well, let's wait and see how things show up next week. So on Monday, I can't remember the analyst's name, but he came out with a report saying, sell it. It could be worthless under all these different scenarios. Yep. And honestly, when you start to see analysts say things like that, and the stock was down 30% that day, it was 70 pence. I looked at it, and we made an instinctual call, which was we wanted to get long the stock and the shares.
Interesting that it had such a contrarian effect on you. I should just mention, for the sake of disclosure, Peter Grauer, the chairman of Bloomberg LP, is a senior independent non-executive director at Glencore. I wanted to flip to the other side of that trade, which is a short Valeant. I mean, I know it wasn't paired up necessarily one for one, but with Valeant, of course, you had analysts like Andrew Left of Citron talking about it and raising concerns about the smoke, the potential fire. Let's take a listen to what he told us back in October.
Based upon the available public information that's out there, on the publicly available information, when I can show shared ownership of something, and then I can show an invoice going from one entity to the next, that's what we pretty much call a lot of smoke. And if you don't want to say there's fire, there was smoke with Valeant last week, and then the smoke keeps increasing on a daily basis.
The smoke keeps increasing on a daily basis. Would you say that Valeant's past the point where that smoke is cleared, or is there still a lot of concern there, a lot of murkiness that needs to be unpacked?
Yeah, so I look at, like I said, both those situations were very unique, right? On one hand, you had a company that could do no wrong for a long time, that had, in many people's mind, a really strong business model, earnings momentum, growth through acquisition. And on the other hand, you had Glencore, which was complete opposite, right? The market was black for them. They had all this debt. And what was interesting, like you said, it wasn't a paired up trade, but it looked to me that you had one model that was actually breaking down, meaning that the business model that they occurred to provide the growth of the last several years was actually gone. Mm-hmm. And when that happens, that's a true momentum shift. And a number of investors failed to act on it. They think that the pullback, which was substantial, is an entry point, and then you're going to see that re-rate. And they looked at that as there's all these value to these assets. What they failed to realize, though, is the fact that the company saddled themselves with tremendous amount of debt, and you could argue the valuation they paid. So when you start to see some of the issues come at hand, both on the political front, mm-hmm. and also both on the corporate balance sheet, which again, they have a lot of debt, you start to look at this situation a little bit more. And then when you saw Mr. Leff, who came out with some interesting research on the company, which all of a sudden unlocked Pandora's box further, you can look at the valuation as it can get fairly dire. But at this particular time, I will say I think they're at an inflection point, and it's going to take a long time for the company to potentially rebound. And I know Mr. Ackman's in it, and the goal would be to try to sort of recalibrate the company. So we'll see how that plays out.
But they might be bouncing along here for a while yet.
I think so, and there could be more shoes to drop, or it could start to re-rate back to the upside. I mean, for disclosure, I'll say we still have a nominal short position in the stock. I think there's still a lot of headwinds for the company, and that's our view.
Okay, now, David, I know that you have been looking at in energy, industrials, and financials. That's kind of your wheelhouse. But recently, you've taken a position in an entertainment company that's listed in the UK, but is actually based in Canada. Why did you go outside of your comfort zone?
Yeah, well, actually, I'll look anywhere. I mean, the one thing is, at Livermore Partners, I'm not afraid of getting out of our sandbox. So, a lot of people in the U.S. will stay and look at, U.S. safe assets. So we actually invest a lot in Canada. I like Canada very much. We look at Latin America. We look at Europe and even Africa to some extent. But again, the risk profile also of your investors, you want to calculate that as well. Sure. So with Entertainment One, what was interesting is we're actually long Lionsgate, and which I think is a well-run company. And we were looking at Entertainment One, which suffered a pretty substantial drop in the share price over the last year. They also were not generating any free cash flow, which caught my eye. So we took a stake in mid-January at that time. This is actually after the CPP, the Canadian Pension Plan, took a very large stake in the company back in November. And the view was, we pushed for change on an activist front, contacted the board and the management team and said, look, you need to pull back on your growth strategy, focus more organically, and also focus on reducing your gearing, and then potentially looking to buy back shares to support the equity.
And very quickly, what was their response initially, and what is it now?
I'll say this, so their response initially was, I would say, to push me off a bit, and unfortunately then it went public. But I don't know if they truly get it still. The equity is about where we paid for it today. I still think it's substantially discounted to the intrinsic value of the business. I think they're very attractive to a suitor. It's a content provider, such as the likes of Peppa Pig and others. So I think it's uniquely positioned, but they have some work to do.
All right. David Neuhauser, thank you so much for joining us today. Founder and Managing Director at Livermore Partners in Chicago. Come back again when you're in town.
Thank you, Scarlet.
And again, as I mentioned, Peter Grauer, the chairman of Bloomberg LP, is a